Hello everybody, welcome to my video. In today's video, we are going to learn about when to exit from a stock. Yes, exiting from a stock is the most difficult part to manage in a stock market. Generally, one should exit or sell the stocks in two specific scenarios. One, either you have seen a lot of profit and you don't know whether you should continue to sit on the profit or you need to do profit booking. Or the second scenario could be when you are seeing that your stocks are plummeting down and you don't know whether you should do more averaging of the stock or whether that is your stop loss and you should exit. Of portfolio churn you will continue to see if you don't know what is the right point to exit from a stock. So in today's video, I am going to cover 5 smart exit strategy. These strategies are going to help you in timing the stock for a proper exit. That will lead you to identify right time for you to exit a stock. That will help you to identify what kind of stock you should exit from, and it should also help you in diversifying your portfolio so that you know that how can you best leverage the swing trading opportunity as well. So strategy number 1, if there is an exit on the fundamentals of the stock. So I'm sure when you guys entered the stock, there must be certain reasons what made you convince that you will spend your hard earned money onto one particular stock or onto one particular industry. If you see that the stock or the industry is not meeting the requisite for which you have invested in, right? It is not meeting that anymore. It does not continue to be a market leader in a space. The moat it used to enjoy at one point of time when you invested is no longer what you see today. Or there are so many entrants in the same space that you feel that the growth can be very challenging. And there can be some other factors as well, something like financial factors, like you don't see the company to be growing at the pace that you expected it to be, or which it was historically, now it is not now, right? Similarly can happen in case of profit growth as well. So for so many reasons, if you have identified that there is a fundamental change in the mode of operation of that company, that is a good enough scenario for you to churn away from that particular stock. The other thing, based on my personal recommendation that I am very closely my monitor, is the integrity of the promoter, right? So business can definitely go ups and downs, but if there is a question on the integrity or the governance of the company, then it is a big red flag for me, and I don't want to partner myself with such businesses. So I can tell you a story that is very close to my heart. Something that I felt was on March 11, 2025. If you go to screener, you will see that on this particular day, IndusInd Bank, which is one of the very big banks, private banks of Indian market, on one particular day it lost 22% of its valuation. Yes, due to accounting or forex related accounting irregularities. Okay, so such kind of thing is a big red flag for me. If I observe something very similar, I observed something like that in Polycab Industries as well. Even though it's a very good company, but if there is a fundamental question on the promoter, on the integrity of the promoter, it is a good exit opportunity for me, and I don't want to continue partnering with those companies. So that's one example that I quoted. The other example that I want to talk about, that even in today's day, right, as we speak today, IT index is down about 18 to 20%. So we speak so highly about a margin of safety. So even though IT index has got a good margin of safety, but considering the confusion and considering the tariff war that is happening between India and US, right? I am not 100% convinced in IT index and how the future of IT looks, at least over the next 1 or 2 years, till the time I have clarity on where the market direction is going. So for me, this is also a change in fundamentals, because India, all this while, it was very much service led. It was not product led, right? Which means we used to be an outsourcing hub from all the US companies, right? Now, due to this tariff war, I think this dynamic is changing. So I'm not very much 100% convinced as to what direction the IT index will go. So this is also an exit opportunity for me. So that's all. We covered only one point, which is if there is a change in fundamentals of the company. Number 2 strategy is exit based on target price. So whenever you buy a stock, there must be some target in your mind that you are chasing, right? So either when you bought the stock, you felt that the PE of the stock is almost 50% cheaper than the industry PE. So let's take an example. Industry PE is 30, you bought it at 15, and you felt there's a good enough delta for you to chase, and that is the reason you bought the stock. Or maybe you see that the stock is down 50% from its all-time high. Or maybe you felt that the company has already tripled in the last 3 years. So there is a good profit booking that you can chase. So this can be considered a good exit strategy when you have a right target in mind, and once you achieve that target, could be the right time for you to exit from that particular stock, right? So I will tell you an example that I have seen in a very recent time. Bajaj Finance, right? Bajaj Finance, if you open on 23rd of July this year, 2025, it was trading at an all-time high. Coupled to that fact that it was trading at an all-time high, if you look at the median PE of the stock, that was also at an all-time high. If you look at the median price to book ratio for the stock, even that is at an all-time high. So all these indicators coupled gave me an indication that this is the right time for you to exit the stock, because it has become a bit more overvalued. While the fundamentals might not have changed much, but there is something called as opportunity cost. Now, post the exit, about 1.5 month today, there is a minus 4% reduction in the stock price. So all that I'm trying to conclude over here, guys, is that if you identify your stock is becoming overvalued, if it has all the price that was in your mind, right, you could consider exiting from the stock and then again buy the same stock at a lower valuation, right? So that's all what I wanted to cover in point number 2. Strategy number 3, exit based on technical indicators. So over the last 5 videos that I made, we briefly touched base on a lot of technical indicators, right? We spoke about support and resistance indicator. We spoke about daily moving average indicator. We spoke about RSI, wherein if RSI is less than 40, it is a bit undersold, and if the RSI moves over 70, it is oversold, right? Even the same case for Bollinger, Fibonacci. These are all indicators that helps you analyze somebody, that what is the right entry point and the right exit point of a stock, right? So I will tell you a story again based on what I've seen in the last 6 months. Infosys, the IT tech giant, right? I recently exited from Infosys on 24th of Feb. Now if you open the chart for 24th Feb for Infosys, you will see that the current market price of Infosys just started to dip below the 200-day moving average, which is my first indicator that this is a stock that you should consider exiting. So when I added that to the other technical indicators, the RSI, the volume, the support resistance, all the indicators were giving me a picture that yeah, this is a good opportunity for you to exit at the current value. Now imagine from 24th Feb till today, almost 6 months have passed by. Infosys was still not able to recover from its high on that day. So good 6 months of opportunity cost I was able to save. So in case you also want to save on the opportunity cost and accumulate at a lower valuation, you should definitely keep an eye out on how weak the stock is going based on technical indicators. Number 4 strategy is exit based on better opportunities, right? So for example, I'm sure you guys, whenever you evaluate stock, you also evaluate the promises, the future promises of the industry or the sector that it is associated with. For example, in today's market, we all speak so highly of AI and the havoc that it can create in the world of technology for the future. Now, when OpenAI and ChatGPT came in, people were just gagaing over it. After a few days, the Chinese LLM got introduced, which is the DeepSeek, and then people felt that that is the next big thing. Does it change the fundamentals of OpenAI? I don't think so. But if I have to tie that back to Indian stock market, you should always keep an eye out on the opportunities. What are the other players available in the market? Are those players come from big brands? Can they capture the market share? Are those stocks trading at a very reasonable or cheap valuation? These factors can change the fundamentals of your stock and also gives you an opportunity to switch your portfolio to a company which looks to be a bit more promising. Now let's take an example for Asian Paints. Asian Paints, I might get a lot of heat for saying Asian Paints in my video because it is one of the most loved stocks for Indian investors, and why not? It has created massive wealth for middle class Indians over a period of time. But if I look at today, right, even last month, Reliance Industry has also exited from Asian Paints. While they created multi-bagger over Asian Paints, they had been an investor for 17 long years. But recently, even they exited at a 11,000 crore worth of block deal that happened, right? And why did they do it? Because if you see over the last 3 years almost, Asian Paints hasn't given any returns, right? The profits, if I look at the profits or the sales for the last 3-4 quarters has almost been very constant. It is not able to beat its previous peak, right? So even I was an investor of Asian Paints, but last year somewhere around October 24th, right? Last year 24th October, I sold Asian Paints as well because I saw that there were so many other industries that was coming, so many other paints brands were coming, and then I switched from Asian Paints to a company which is a very small cap company called as Sirca Paints. So that is something that you should definitely consider and keep an eye out. It's not that something which continues to be a moat today, it doesn't mean it will forever be a golden stock. So in case you find there's a better opportunity cost within the same sector, it's best to rotate your capital. Exit 5. This is exiting based on your portfolio balance, right? I can connect this with my portfolio as well. So at one point of time when I felt that there was too much of promises for defense stocks, I was a bit heavy on defense, right? And at one point of time when I saw that defense stocks was around good 25% of my portfolio, I felt the need to cut some position from defense and rotate my capital to finance and banks which was a bit light on my portfolio. So this strategy is very important because if you see one stock continues to grow, for example, Dixon Technologies, for me it has grown 300% in the last, I think, 1.5 year, right? So there's nothing wrong with the company, but at a time when it is going, it's such humongous pace, your portfolio diversification is taking a toll, right? So it is good not to exit the complete position of it, but maybe just to book a partial booking on those stocks and switch it back to some other company within the same sector, which looks to be a very, very deserving stock, which is still very much in the small cap category, right? So my 5 exit strategy, if you add all the narrative to it, one pro tip that I want to give is that somebody should not go as a takeaway from the video that when you observe all of these things, you should exit. The last point that I want to drive home to you guys is that when not to exit from a stock. So whatever the previous 5 exit strategies that we covered, we just gave you few indicators, few rationale, few logic that will enable you to take better and informed decision in your stock exiting journey. But I don't want to drive home the point that if there is a very short-term fluctuation or a short-term volatility, you should jump from one stock to the other. No, that's not the messaging over here, right? So I just want to ensure that I double click on the point that for short-term volatility will happen. Companies will have good time, bad time. For one particular month, one particular quarter, if you don't see the numbers, and then that might not be the right indicator for you to exit from the stock, right? Don't churn away portfolio if you don't see returns for the next 7 days or 14 days. So that is something I want to be very, very cautious, and I want to undertone that thing as a part of the message for this video. So that comes towards the end now. So thank you so much guys for watching the entire video. I really, really appreciate it. I hope there were certain takeaways that you had from the video. And in case you are liking the content and to make the YouTube algorithm happy, I would recommend you to hit the like and the subscribe button. And for suggesting topics, that what topics or what data I should cover in my next video, please do comment in the comment section below. That's it guys. Thank you so much for watching and see you next time.